Well, hello everybody, I'm LA, and this is your daily NeoTA wrap. Take a look at these markets, and we do it from a neoclassical perspective. Each time we try to ask ourselves what happened today and what does it tell us about the coming ones. I do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under channel L8 Little. We had the Fed today. The Fed came out, basically said, we think this bad GDP, we got a bad GDP number this morning. The slowdown is really transitory. We're probably going to raise rates still, and I think they're going to keep saying that until the cows come home. So what happened today? We ended up with a down day as a result. Actually, we had a down day to start with, and that was primarily because Europe was selling off today. We'll take a look at them. But folks, this market has no catalyst. It's got nothing to drive it higher. As a matter of fact, the only thing that was there to drive it higher really didn't work, and that was Apple and the Fed. So if you think about it from that perspective, both of those are out of the way. Neither one of them pushed it, and we're selling off. It was a sell-off across the board. The only thing that was up was oil. And the commodities started to reverse. Actually, commodities were down. They started to reverse, and they kind of held. The gold stocks at least did. The dollar reversed back higher. It was down worse. It was still down almost 1%. Dollar stretches quite a bit lower, much lower than it looked like it was going to go. That continued to put pressure on the equity markets to some extent, but really the pressure was from overseas. German interest rates starting to spike back up the other way. Something seems to be happening over in Germany. And I want to start with the European market as a result. If we look at here, this is the CACs. We're talking about the CACs is probably going to try to come back in and do a retest regen. We kept looking at the German market as an indication of that. And that is what it's doing, right? And it's coming back with less volume. That suggests to me that it's probably going to test this tomorrow morning. And by the time we open, probably flip back around and hold this range more than likely tomorrow. So that's the way the CACs is set up. Let's take a look at the DAX. Now the DAX is worse off. It's been leading the way down, and as we talked about, the probability was high that it was going to break these swing point lows, which it did, right? So it smacks up underneath them, comes back into this little congestion area. It actually got deeper than I expected. I kind of thought the bottom of this bar would be where it targeted. It actually got deeper than that. Volume's pretty good on the way back. So now the German market, really is dependent on the CACs turning around. And if we draw out, kind of the two ranges, and about here, right, the two ranges that were there, and that's it's almost equidistant, a little bit farther down. This thing, again, I expect them probably to test in the morning along with the CACs. And if they are going to bounce from here, if that CACs is going to hold its bullish retest regen, and it should, but we've seen a lot of shoulds not happen. But if it's going to hold this bullish retest regen, which it should because it's more than 6 bars on the breakout, then we would expect, right, it to hold here. Now, again, we look at the breakout itself and the thing it's coming into, and it's a mixed picture, so there's no guarantees. If we look over at Hong Kong, Hong Kong's still hanging up here, so is China. And so it's really nothing more happening on our front other than European weakness driving us lower. But when we talk about lower today, it actually held up pretty well. I mean, we were down, a little over 1/3%. Volume did expand on the S&P, but it didn't on the NASDAQ. And the NASDAQ is the one that's doing the bullish retest regen. And so when I look here, right, the NASDAQ is doing this bullish retest regen. And right now, that volume is actually tailing off as it comes back into it, which is a good signal. It looks to me like this thing's going to try to hold. And, I think it really, the funny thing about it now is I don't put as much weight on our markets as I do the overseas markets because we're really being driven by them. And so the same thing here with the NDX. NDX comes back into this area. The thing that is going to be interesting tomorrow is Apple, because Apple came out and said, hey, we've got some problems with our watch, components, and I'm curious to see how Apple trades off of that, because that iWatch is minuscule in terms of their revenues. So, materially, it doesn't matter. It was something more important today was Apple's filing saying that they may have a material hit on earnings as a result of the tax, quote unquote, tax evasion they're being, investigated for with their Ireland scheme that they used for so many years. So, Apple test the top, comes off today, follow through to the downside, still decent volume. It's coming back into this big bar on the announcement. If Apple doesn't gather right in this area, and actually it does look like Apple's going to trade lower. It looks to me like Apple's going to try to come back into the intersection of this. So maybe another 3-4 points down, which is going to put more pressure on the NDX if that's true. May get a bounce first, right? Get an ABCD structure going to the downside. And I did a video this morning and I likened Apple to Amgen. And not that they're the same trade, but Amgen did the same thing, tested the top, and now Amgen actually failed on volume and price, whereas Apple only on price. But Amgen's been straight down since then, and that has put pressure on the IBB as a result. IBB's trading down here, going to try to break or at least test the swing point lows before it's over. I wonder, and that's what I talked about in the video this morning. If you want to check it out, you can pop over. Was it? Oh, it wasn't there. I talked about it actually here. Blowout earnings. I talked about it in the macro views. So if you want to check it out, you can check it out there. I'm going to come right back and we'll take a look at some viewer questions and then kind of do a quick wrap tonight. And I'll be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the tools and earn free services or trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
Well, before we go to the viewer questions, I actually want to look at the ox markets a little bit. This is the FXE, and the currencies were the ones that were moving today and moving pretty big. The euro gets over the swing point high, and as you can see, the euro's getting a nice push. That retest regen bearish on it is way up at 111. We traded as high as 109, almost 110 today. So it could move another % higher to get up into that area. If you look at it on the weekly, this thing has a little ABCD structure going to the upside on the weekly now, or at least it's attempting to. And if it does, right, that can push it up into this area, which is that area we were just talking about. So it does look like that probably is the target. Look at the volumes overall as it pushes higher. This is a very weak currency. I don't think this currency is going to do all that much. Maybe it comes back up into this area and then that's where it gives it up, somewhere up in here. I think the intersection of these two is extremely going to be extremely tough to get over if it gets above this area. So yeah, it can travel a little bit farther, but the real question is what is the dollar going to do? Because the dollar is the one, to me, that's going to be the driver here. And the question is will people believe the Fed and think that they are going to, tighten the screws and raise the rates, which puts support under the dollar, or are they not? When I look at the dollar, the dollar we were talking about had already done an ABCD down, and it was finished, right? It finished last night. Well, it extended past that today. Volume very huge. This looks like blowout type volume on the downside. And when I look at this on the weekly chart, and we've looked at this before and said, okay, where's the range going to be? Well, that's what I was talking about. I was talking about this bar, and there we are. We're at the bar. So when I think about it from that perspective, and let me grab my pointer, that is 25.21, and we got to 25.28 today. So we're almost there. And so my expectation is the dollar is going to find support here. Now, if the dollar does that, that's going to put pressure back on commodities. It's going to, flip the euro and the others back down, and that's going to take the European markets back up. And so, when I look at this right now, it's playing out just like it looked like it was set up to try and do. You get the break, you get the expansion of volume, the escalation as people cover, and then, it's back the other way. And if I go look at gold and silver, today they started to sell off. Gold, not so bad, but silver did. Silver did an over-under. So it goes over, back under, less volume. Silver looks to me like it's going to try to drift back in. Gold probably follows. So the commodities look like they're going to flip around and head back the other way. The one that held up today was the oil market, but that was a failure. It was a test failure of the highs. It finally tested that high. 2029 was the number, 76 million shares over there. You do half that, less than half that. You get over it, back under it. That's a test failure at the highs, folks. This thing's ready to try to come in. And we'll see, the question is how far does it come in? Does this thing trade all the way back down? Or does it find support somewhere up in this area? So, the real key here is going to be, does it find support in these support zones that are shown? Or does it really start to break down? If it does, look out, right? Because it's going to come all the way back to this big bar. And so this is the bar it's going to try to come back to if, in fact, it starts gathering momentum on the downside. But we're a long way away from that. All we have so far is the failures at the highs, suggesting that it's going to turn around and try to head back the other way. Let's go to the viewer question here. Okay, so the viewer question tonight has to do with assured guarantee, AGO. This is like a surety and title insurance. They had a big run up, right? And so if we take out our little pencil, we had a nice volume spurt here, which is this bar right there, right in that area, and the low is down here on that support zone. And then as they came back, you got a big spurt here on this bar. Now, if we leave that aside and just simply go back and look at the retest regen zone, right? If it's more than 6 bars, what should it do? It should bounce. What does it do? It starts to bounce. But the bounce looks kind of weak to me. And the reason I say that is if you look at this high on the high volume bar, that high is 27.25, couldn't get over it yesterday, gets over it today, but fails to stay over it. No volume on the push, right? That looks like to me it's going to come right back at you one more time. I suspect now this is going to be a tough area to get over, and that's where it just failed at tonight. And so it looks to me like it's going to come down. It's going to test into this one more time, and we're going to see what it's made of on that test. I expect, from what I can see here, I expect it to actually make it back to that support zone, and that's going to be the key. Insurance companies being hit in general, not so much the title insurance, but others. Maybe this is just sympathy on the title insurance that's selling off. You have to check your earnings on this. I think they come up in a week or so. And so, I don't think I would be trading in front of earnings, especially not with this picture. Let's look at the weekly real quick, just see what it looks like. So it's coming back in. Now here's a good, it's a good setup on the weekly. You go over 3 swing point highs. Now the only issue is the issue I keep telling members, and that is that you don't have any catalyst to take this higher, and every time you get up to these things, you're seeing failures. This particular one actually didn't fail. It actually did its ABCD structure and finished. Now it's pulling back. Is it going to do another one? Or is it going to fail and come back in deeper? Not so much fail, but come back in deeper and do a full retest regen now, right? Because it's within 6 bars, and usually if you do that, actually the retest regen is off this bar. So it's about 26. So now that I've seen that, let me go back over here to the 26 number, and that takes you right into what we were talking about. So that looks to me where it's coming to. So I think I would let it come back in before I did anything, and I'd check those earnings too. All right, for the wrap, let's do that and call it a night. I'll be right back. You know, one of the things we try to do in neoclassical is always determine what is the main factor or factors that we should be looking at. With the Fed today coming out and doing what it did, and with this hammer reversal type setup, blow off type volume on the UUP, the dollar, it was coming into a, kind of a last zone. And in particular, if we look at it on the weekly, right, that bar that I was talking about it coming back into, the dollar to me is the story. This is where everything is. If you take the high 26.50, that low, which was this one, so it's roughly $1. Take $1 off of that, takes you down to 24.36, and if you look at the price point, 25.36, and if you look at the price point, that's where we are. So the little ABCD structure is just about done, right? And you're coming into an area it should hold, and if it does, that's going to put some juice back into the European markets, and that, of course, by proxy, because we're trading off of Europe right now. If you look at the intraday charts, they're 1 for 1. Everywhere Europe goes, the United States follows. And so, if you're cognizant of what's driving what, and in my opinion, this is what's driving things, this is where you want to look. This is the test. You want to see where this thing goes tomorrow. If it can hold, right, and start to bounce, and if that does become the bottom of the range up here, well, then that's a big deal. That's going to put support under the market. It's going to keep them up. And so I think if you want to watch, for the tail tomorrow, you watch this market and you see what it wants to do. Because this is the one that's going to be the key. These are the ranges. It's right at the key point. I would expect at least a bounce, if nothing else, out of it here. And then we'll see if it really is the bottom of the range and if it's going to trade inside this range. If it's going to trade inside the range, then, if we go back to the bounce idea, then we come back in here and say, okay, where was the ranges at? Well, here they were. This is about where they were. It stretched. Yeah, on this one it stretched just a little bit under it. I think that's drawn about right. I could have used this, right? Actually, I probably would have drawn it that way if I did, and that would be a little bit closer. But anyway, it's ballpark, right? These are not meant to be exact. They're supposed to give us some feeling or some idea, right? That's probably the better one. These were kind of outliers. So you're trying to look for the majority of the trades inside the ranges, whatever they may be. And in this particular case, that looks about right. Does it hold, right? If it does, this thing's going to bounce, Europe's going to bounce, we're going to bounce. And so my thought is tomorrow we're probably going to see a bounce. Probably going to see Europe test in the morning, and maybe even by the time we start, and then we're probably going to bounce off of it. All right, folks, so I'm going to leave it at that. My idea last night was that we would get a little strength and then some sell-off. Well, we got sell-off and then a little strength. So, I guess if we just flip it around, we can call it good, but it definitely was backwards. Have a great one. I'll see you tomorrow. Good night.